of seconds. So we're going to review last week's price action, June 23rd through June 27th. Going to be mainly going over 1 minute inversions. There are a couple of 30-second inversions that I took, but the majority of my trades were off of 1 minute. So I'm going to go day by day. We're going to start obviously on Monday. I will show my entries, my exits, my reasoning behind each trade, and then we'll, if it's a 30-second setup, I'll show you my journal, which I have over here. So looking at Monday overnight, where we always start. Sunday we gap down, had the Middle Eastern conflict. Simon, I appreciate it. Cool. So we gapped down Sunday. Price gradually pushed up, filled this new week opening gap. And then we established a series of lower highs, right? So one clear swing high, another here. And I'm not going to be flipping through time frames just for simplicity's sake, but all of these are low resistance liquidity on the 1 hour chart, right? These are consecutive lower highs, which make for great, bullish targets later in the day. So with that logic, going into the open, what did we see? You guys can see here, this darker blue area to the left is overnight, and to the right is 9:30 equity session. So if we throw up a simple fib from this overnight high to overnight low, right? Price was just above equilibrium at the open and then immediately sold off. So shorts were selling into this premium area here. We got a sell off right at the open, which is good, right? Being that we have these higher time frame bullish targets, we do want to see some manipulation to the downside, and that's exactly what we got, right? So 9:30 open, straight down, right? All of these 1 minute candles broke the last low, and then what was our terminus, right? Where did we reverse? It was this low here. So clear sweep here, right? Wicks respecting this low being penetrated, and then we get a 30-second inversion actually. So I'll show that trade right now. These orange lines down here are going to be my entries. Just kind of eyeballing it based off of obviously this being a 30-second setup. So if we look at 30, right here, there was a small fair value gap, right? Even if a fair value gap is one tick, right, that is an imbalance in price. So an inversion, a close above or below, is still valid to me. So we had this small 30-second fair value gap here, right? We reject it once, twice, and then finally close well above it. With all of this context, this is not something I'm waiting for retracement on. So buying this close immediately, right? You see I bought just below 21.8, sold just above 21.810. Why did I sell there? Because we had a fresh 1 minute fair value gap here. So with my trading style of scalping, right, I'm not trying to hold an entire move. As you'll see in this leg of price here, I actually got back in to my position up here. But that's never my goal, right? I'm not trying to capture an entire range. I'm not buying the bottom and trying to hold till these higher time frame targets. These targets are purely just for draw, right? So got something like 13 points off of this trade. So with an entry of about 808, or excuse me, 798, and a TP just above 810, this is what the trade looked like, right? I had my stop within the 30-second order block. If you wanted a better risk reward, you could go within this 1 minute order block, but my stop was right about here, mean threshold of this last 30-second order block, right? We closed above these two 30-second down close candles, so I want those to act as a sort of defense mechanism for my long position. As you can see here, virtually no drawdown was suffered, just went straight to TP. Those trades are always the best, right? When we know higher time frame is aligned with our lower time frame precision. That was trade 1 on Monday. Trade 2, like I said, I caught another long up in this move. This was a 1 minute inversion, right? When we closed above this I'll actually highlight this 1 minute fair value gap. What did we do here? Bought this close on a retracement. Now I have the magnet on, so this, try not to let it throw off my levels, but bought this retracement, right in here. And you'll see I'm zooming in and out. I recommend you guys do this as well, right? Just for the sake of precision. Every tick matters, right? So you don't want to be accidentally missing a fair value gap, or, you know, whatever the case may be, just because you didn't zoom in enough. But in this move, we're obviously fairly high up in this range, right? But we haven't had a real reason to reverse yet. No highs have been swept, right? We have these highs up here, and then obviously the higher time frame swing highs over there. So I'm still fine taking a long, right? My context is still bullish. So this was my second long. So we are buying this 1 minute close, right? Price has inversed every 1 minute fair value gap since the open. Got in on a bit of a retracement here. So close here, price comes down, opens here, comes down. Going to draw down a little bit with my stop at the low of this displacement candle. Price pushes back up. Nothing's changed in my narrative, so I'm still in, right? No reason to get out. Come back down just below my entry. Sort of get this tweezer bottom here, and price begins to push back up. My exit was this 1 minute fair value gap here that was holding with a swing high there. So this is a great place to take profit, right? Swing high and a small 1 minute fair value gap. As you can see, obviously we did push up, taking out all of these highs. Now I know a lot of people would just ask, why would you not buy this close and just hold? That is not my trading style, right? I'm not trying to be a hero and get, you know, over 100 points. More often than not, Simon, who's in here, we actually talked about this last week. People who hold for these huge moves, you're going to be stopped out break even a shit ton, right? Excuse my French, but that's just put bluntly what's going to happen. And not only that, it actually is a net loss for your accounts, because you would have suffered that trailing drawdown, right? So let's say you're trying to be a hero and hold till even just this high, right? Having entered down here on the 30-second inversion. So you're shooting for just about 100 points, right? In this case, it did work out, but let's say price did something like this, right? You get your first move up and then price retraces. Boom. What did you just lose? You lost 837. You lost over 50 points of drawdown, right? With Apex, if you're trading, you know, obviously you'd be downsizing for a move like this. But whatever size you're trading, 50 points worth of drawdown being taken away is significant, right? So why try to hold for these entire moves? Why demand that the market give you everything you want when you can scalp? You know, you can still make great money trading these 10, 15 point, 20 point moves and getting in and getting out, right? We're staying quick on our feet. We're not demanding that the market, you know, give us this perfect trade, but, you know, we're still making money. So that's the best way to do it. You know, Lance Breitstein always says it's easier to have an edge on a lower time frame like the 2 minute than it is the 2 hour or the 2 day, just because you have to be right for a shorter amount of time. So that is Monday. We'll move to Tuesday now. Get rid of some of these drawings. Monday was pretty clean. Going into Tuesday. So again, overnight session, this dark blue shaded area. As you see, we ran up well above Monday's high and sort of began consolidating just ahead of the open. Bit of a choppy open on Tuesday, right? No clear direction. We did inverse this 1 minute fair value gap here at the open on this candle's close, but that's after we had taken these highs. So not something I'm really going to be buying, especially within these larger 1 minute fair value gaps. Push down, push up. And then we finally get a very clear trade. And I say clear because this is well outside of this range of chop, right? And we have just engaged all of these fresh 1 minute fair value gaps up here. Obviously, you'd be looking at your 15-minute, your 5-minute, your hourly chart, and there's going to be stuff over here as well. But regardless of what time frame you're looking at, a ton of fresh fair value gaps have been retraced into, right? So with that said, this was the first trade on Tuesday. We had this small 1 minute fair value gap here, and actually another one just above. Sold short on this close. Now, depending on your preference, you could have exited just below at this 1 minute fair value gap, gotten about 6 points, if you sold the close. Or what actually ended up working out was going break even here. So I'll mark this out. So break even at this lower 1 minute fair value gap, right? Taking risk off the table just in case price was to react. And then holding to this swing low. So this would have yielded about 25 points, right? Stop at the high of this displacement candle, and virtually no drawdown the entire way down, right? So selling short here, break even at this 1 minute fair value gap because we have reacted bullish to it before, and then holding, and you see you get this delivery all the way to the swing low. So great short, right after the open, about 20 minutes after. So that's trade one on Tuesday. Second trade, we started to chop again soon after. Get this big displacement to the downside, but there was no opportunity to short this fair value gap. But what we did end up getting was this 1 minute long here. This is a trade that I took on retracement. Unlike this one, I didn't get the best fill here just because I sold the close. I didn't wait for the retracement, which in hindsight I could have, but it's all good, played out. This trade though, like I said, coming back into this range of chop and, not having the best price action thus far, I did get in on a retracement. So let me actually see what my exact entry was on Tuesday here. So I bought at just under 300, something like this. Take this magnet off so you can see. So what's happened here? Chop, right? A bit of accumulation, manipulation to the downside, huge displacement there, and then pushed right back up, right? So there was no follow through. We didn't keep dumping. We didn't take out this low or this low. So this tells me that this was not a real sell off, right? This was a manipulation to get cheaper longs. So buying this retracement of this inversion, looking for these highs, right? We have 1, 2, 3 highs here. We also have this 1 minute fair value gap that was present, so you could have gone break even there. But this trade was great, yielded something like 12 points, 12.25 points. Stop at the low of this 1 minute order block, right? We had just displaced above it, validated that as a bullish order block, given a nice retracement. So this helps your risk to reward greatly, and then get out, depending on your risk tolerance, either at the fair value gap, get about 10 points, or these highs, or even this fresh 1 minute up there, which gave 17 points. Clean setups if you waited for them, right? If you knew not to chase this long, if you knew not to trade in this chop, just waiting for these setups to come, right? Focusing where's liquidity, right? Consecutive lower high, swing highs here, fresh 1 minute there. Price wants to move up into this area. So that's Tuesday. Jumping into Wednesday. Wednesday overnight, as you see here, lots of consolidation in Asia. And then early London, we swept Tuesday's high, retraced a bit, and then just kind of launch padded up overnight. So going into the open, we do know that we're high up. So longs, you kind of want to be careful. You don't want to be chasing longs. But what we did get was a bullish open, right? And then we get this 1 minute fair value gap here that is formed. So Wednesday I did take a loss. We'll go over this here in a second. But we get this 1 minute that's formed here, right? Price completely respects that, with wicks not even excuse me, with bodies not wanting to close within that, right, and bearish closes being closed above. So bullish so far, and I should have proceeded with a bit of caution here. There was a 30-second fair value gap in this range that we inversed, right, to the downside. So I shorted that something like this on the 30-second and got stopped. As you see, I wasn't wrong, but I was too early. So that's what you guys need to be careful with, especially on reversals, right? You can be right in your bias, but just too early, and price wants to stop out those early positions. So as you can see, I mean, here we get some down closes, they get ripped above. So those are a ton of shorts being stopped out. Down closes, ripped above, and more stop outs there. But then eventually you get this beautiful delivery to the downside. So just being careful of something like that. I mean, if you look at it from an order block perspective, you see that every order block is held so far, right, on the 1 minute. So bearish close, we didn't close below it. Bearish closes, didn't close below it. Bearish closes, yet to close below it. So just a learning lesson there for us all. Be careful with your reversal entries, right? It's better to get in late than get in too early. Most of the time, right? If the context is still there. So that was my stop out on Wednesday, but was able to get some of my loss back here. So let's go over this trade. So what happened? Shortly after I was stopped out, price sells off. We take out some of these lows, get a deep OTE retracement here. And that's just an ICT fib reference. So let me get my levels right. So obviously this is a premium. And then the OTE range is something like the 0.62 to 0.79 or whatever it is range, which is indicated here by these red lines. So as you can see, completely respect this range. And all that is like I said, a deep retracement. And if the context is still there, that should hold. So we tapped this fresh 1 minute for value gap up here. Extreme premium that we're in. So shorts are really liking the risk reward of selling up here. We get a nice reaction. So there's my bearish confirmation, right? That this was not a reversal, this leg here, but rather a deep retracement. So now I'm looking for shorts, right? What do we have? We have one minute for value gap here. This gets closed below. I'll zoom in so you guys can see it. We do close below this 1 minute. However, we did so only after tapping a fresh 1 minute below. So you see price comes down, we tap this and then close below this. That completely invalidates a trade like this for me. So now I need to wait on this 1 minute to get closed below. Fortunately, that ends up happening just a minute thereafter, and I'm short this close, right? Fairly low resistance down to this fair value gap, right? You can look at this as an order block, but for me, with all this confluence, I'm willing to take that short. So in on a retracement, right? We see a lot of wicks. More than likely, this candle will have a wick, which it ended up, having a wick. And I think my stop, let me see, on this trade, just find out. Yeah, so my stop was just above the beginning of these two wicks here. Sort of within this previous inversion. So just under 1-to-1 risk reward. For me, it's completely fine. About 9 points of profit, so we're selling short. This close, getting a bit of a retracement, entering on this wick. Right, lower time frame, power of 3. Selling short there, taking profit at this fresh 1 minute. And that was, that got us back to break even after taking this stop out short there for Wednesday. And then there was one more trade. Yeah, here it is. This short played out very nicely. As you can see, lots of chop on Wednesday, unfortunately, but when we do get these moves, they happen, and they happen quick. So 1 minute for value gap here, gets inversed, we sell short. Why? Because none of these major highs are being disrespected, right? So we're forming lower highs on a higher time frame. Again, a nice premium retracement of this leg. This didn't respect OT, which is fine. I mean, there was no fair value gap here for it to reverse that, but certainly a retracement reversal, right? We have multiple lows just below that we targeted, and a very clean inversion right here. So short at this close, right, holding to this swing low. Now this is a trade I went break even on at this fair value gap, right? And price did react initially, as you see here. Let me try and clean this up a bit. So we're short here. Stop on this trade was just within the first 2 ticks of this upper 1 minute order block. We initially react down here at this 1 minute fair value gap that's been holding, so we're break even now. Risk is off the table, but then soon after, right, we're still in profit. Price dumps and goes to the swing low. So that is Wednesday 243. So not bad. Jumping forward to Thursday. Thursday very clean, bit of a bullish rally soon after the open. We're looking at overnight price action. Again, another big push up. Right. Why was this week so bullish? In my view, it was just, market makers, institutions trying to close out the month of June green. I think tomorrow's the last trading day, but last week was the last full week, right? So bullish overnight price action again. Coming into Thursday, we understand we're a bit high up, so looking for a bit of a sell-off before potential another leg up, which is what we got. Now in here, we have this 1 minute that was holding in a 30-second short that I had taken that played out very nicely. So throwing up the 30-second chart here, looking at the 1 minute, right, we get these continuous high sweeps, right? So a 3 drives pattern, and then a huge 30-second candle that sells off, right? Closes at the low of this range. Now I took my first entry on this position just after the close. I could have waited for more retracement, but all I did was add on a retracement. As you can see, 30-second for value gap in there being respected, order blocks being respected, and price dumps and makes a new low. So that was the first trade on Thursday. Now a trade like this, you need to be careful of, just because this could retrace even further, right? So stop placement on a big displacement inversion is pretty crucial. So if we look, I had an average entry of about 508 and a TP of about 495. So looking at that on a 1 minute, 508 entry, 495 exit. I was in here, right? My stop on this trade, my defensive PD array was this 1 minute order block, right? You could have gone into this 1 minute for value gap if you wanted to, right? Stop like that was good, but mine was just above mean threshold of this 1 minute order block. So just over 1-to-1 risk to reward, right? Selling short here and then adding on this retracement. Didn't suffer too much drawdown, and then you see we begin to close below all these bullish candles and deliver. So that was trade 1 on Thursday. Trade 2, beautiful trade. Small 1 minute fair value gap in here. Again, the importance of zooming in and being aware of what's going on. So as you can see, only 2 ticks, this 1 minute fair value gap, but a beautiful reaction to this inversion, right? Printed all the way to these highs. This trade, I was able to hold a bit more just because there was no conflicting fair value gaps here, right? We have low resistance liquidity all the way up into this 1 minute fair value gap. All that means is uninterrupted consecutive lower highs, right? So 1, 2, 3, 4, 5 1 minute highs leading up into this fair value gap. People trading, their own retail styles are trailing their stops, right, below every 1 minute close, the high of every 1 minute candle. So all of this is buy stops being absorbed. And as you can see, price did not violate any 1 minute low on this move up. So bought this close, didn't wait for a retracement here, and I think I was out, something like that. Delete that real quick. Stop on this was mean threshold of this order block, and mean threshold is just halfway of an order block body, right? So we had closed above this entire 1 minute candle. I want this to serve as a bullish PD array now. And yeah, beautiful. I mean, I could have held this up into this fair value gap or even these highs, but 20 points is more than enough for me. And that's how I ended Thursday. So smaller trade here, right? Kind of had to work my way around this trade and add and get a better average, but then a beautiful trade here to conclude Thursday. So last day of the week, Friday, 27th. Once again, same story as the rest of the week. Bullish price action overnight, right? Price was trading above previous day high at the open. What did we get? So very interesting trade. I normally wouldn't take a trade like this just because it's relatively high up in its range, but this this setup's context really made it what it was. So what did we have? We had equal highs here on the 1 minute. Change this from a dash line. So equal highs on the 1 minute, right? We pushed up just after the open, failed to make a new high. So made relative highs with these highs. So a whole lot of buy stops are right here resting at this resistance level. And we do have a 1 minute fair value gap here that was initially holding, and then you see we inversed it quite high up on this 9:33 Eastern close. Price gave a nice retracement before taking out this high. That is exactly what I bought. Let me try to get this nailed in. So as you can see, we close here, open here. Before price goes up, I know it looks like it went straight up, but it actually did retrace down something like into this level. My stop on this trade was at this 1 minute order block. So just under 1-to-1, and this is the order block I'm referring to, just under 1-to-1 risk reward, but that's enough for me. Small trade, right? Just under 8 points, but gets the job done. Let me find it on my Friday journal. Here it is. Okay, so I got more than I thought. I got about 9 points on this trade, right? As you can see here, price comes down first by this close, and then we sold that high up there. So that's trade 1 on Friday. Trade 2 was actually another long. This was on the 32nd. Get a good picture of it. So what do we have going on, right? We have bullish PD arrays being respected. We've sort of began to establish a trend here, right? Bit of a choppy open, but then we get the 1 minute inversion. Price retraces, respects bullish PD arrays, comes back up. Fresh 1 minute fair value gap gets formed. This holds beautifully. And within this range here, there was a 30-second fair value gap, which is what I went long off. So as you can see here, we had a 30-second fair value gap, gets closed above right here. I bought a bit of a retracement. I did take some drawdown, right? About 5 points, 6 points of drawdown, but my stop was something like within this 1 minute fair value gap or one of these lows here, and got out just above, just before these highs here, yielded about 6 points there, right? So 6 points, 10 points, 16 points, that's enough for me on a Friday. And that's it, guys. That's the week, right? What I really want to focus on going into Q3, right, starting this week is just context behind setups, right? Not being a machine gun, but focusing on quality, right? Having higher time frames aligned with my bias and having that lower time frame precision, knowing when to go risk on and knowing when to sort of sit on the sidelines and just wait for what we're looking for. So that was last week.